Hi, Jonathan York from IRG-BOP. Talking this week about the high New Zealand currency and how you may be able to benefit from it. Obviously with the currency at the moment, the New Zealand dollar is relatively high against the US dollar, around 73 cents, and around 46 pence against the British pound. Now how can you benefit from that as a Kiwi investor? What you could look to do is just to change the New Zealand dollars into US dollars or to British pounds and just leave those in a call account. The issue with that would be that currently interest rates in the UK are around 1% official rates, and in the US are 0. So the bank is only offering you around 1% to 1.5%, and you may have to hold a substantial balance before you actually start to receive any interest on the balances. Another way obviously is to look to buy US dollar or British pound based assets, and looking at shares where you have access to the investment and to be able to cash them in at the appropriate time. If you're looking at investing into the US, so the currency around 73 cents, and you want a broad exposure to the US market, look at some of the exchange traded tracker funds. Two particularly we wanted to look at here was the SPDR, which tries to replicate the S&P 500. You can trade that on a daily basis. You've got access to your money. Another one would be the Triple Q shares from the US, which tries to replicate the NASDAQ 100. So that's more technology based. S&P 500 is more broad based for the US share market, as the S&P 500. Now, just an example, if you look at on the S&P 500 replicate, if you currently bought that at today's price and you saw an increase of around 6% in growth over the next 12 months, but you saw the currency come back to around 65 cents, so bearing in mind we're currently around 73 cents, your overall return, gross return for that investment would be just under 20% for the 12-month period. So that is obviously dependent on the currency coming back, but obviously what you're looking for is that currency movement, so you look to hold the investment until the currency does come back into your favour. If you look at it on the sort of fundamentals going forward, the US economy is forecast to grow for 2010 at around 2%. That compares with the UK at about 0.9% and Japan at about 1%. New Zealand forecast for the economy growth for the next 12 months is probably just under 1%. So you are should see a pickup in growth for the economy in the US. If you look to buy these tracker shares, that is one way of sort of playing the strong currency. If you're looking from the UK's perspective, similarly you probably look at RIT Capital Partners. That's a UK listed investment trust. Again, similar sort of perspective. You're looking at getting in with a currency around 46 pence. If you saw just a sort of small return of sort of 5-6% on the actual growth of the shares, but the currency comes back to around sort of 37-38 pence, you're going to see close on a sort of 20% return. But I say it is dependent obviously on the currency, and that's really what you're looking to try and do. Really just trying to play the currency. You can look at individual stocks, but obviously the worry is that you're placing all your investment eggs in the one basket with that particular company performing. If you look to buy the RIT or the replicant S&P or the replicant NASDAQ, you get a broad-based exposure to the various markets. So we are running seminars here in Tauranga on the 20th of October, 2 o'clock and 5:30. We still got a small number of places available, so you can give Lorna a call on 0800 867 323 to reserve a place for one of those seminars. So we'd love to see you there. You can contact Lorna on that number or through the website www.irgbop.co.nz. Thank you.